always recommend tax ID number. I wouldn't let my nephew, who runs a lemonade stand, use his social security number for anything. Your tax ID number, as well as that contract.
Right.
And that pretty much would put you in compliance with the IRS as far as, protecting the contract as well as the business owner from any issue.
So basically what you guys definitely want to make sure that you need to have a clearly defined independent contractor agreement for every single person that is an independent contractor that you consider to be an independent contractor. Now, when you have that, you can go to irs.gov and download this W-7 form that he's talking about. And so you can do that. Just make sure that every time you set up a contract, an independent contractor agreement, just have that W-7 form attached to the back. And that way, now you're good. Now, the other thing someone asked about, when you mentioned don't do the social security number if you're a sole proprietor, I'm going to provide an answer, and then Saafir, you can chime in as well. There's a lot of things that you have to think about as it relates to your social security number. What you in essence will be doing is you will be providing your personal social security number to every single person that you have an independent contract arrangement with. That will open you up to identity theft. Just because you're an independent contractor a sole proprietor, just because you're a sole proprietor doesn't mean that you don't go and get an EIN number. You still can get an EIN number as a sole proprietor. Be very careful, because remember, all of your personal things are also connected to your personal social security number. Now, from a legal standpoint, and then I promise we're going to get back on the CPA stuff, but from a legal standpoint, you really open yourself up to commingling your business and your personal when everything is under your social security number. So that opens you up to personal liability, even if you have an LLC. Even if you have an LLC, it opens you up to personal liability because both your business and your personal assets are under one number. So for those of you that are sole proprietors, if you have been operating with your social security number, stop. Go to irs.gov as soon as you get off this and get an EIN number.
You can do it online. They'll get it to you in about 20 minutes. Just fill it out and you can have it instantly. I mean, just, 9 digits, that's all you need.
Exactly. And you'll get it instantaneously. Yeah. One more question along with that is that if you had an EIN number long ago, should you get a new one?
It depends on the entity. If the entities are related, then I would tell you no. If it's two separate entities, then I tell you yes. If I decided I wanted to do finance and insurance, I could still do that under the EIN number that I have now currently for my practice. But if I said I want to set up, Malik's chicken wing joint, then I would have to get a whole new tax ID number because we deal with two separate entities.
Okay, awesome. Now, someone else has asked about something called a CPN number. Are you familiar with those? And what is your take on?
Run away.
Tell us. So for people, I know about the CPNs, but for people that don't know what CPN numbers are, Saafir, talk about that. And why are you saying run from them?
Basically, the CPN number is kind of like another way to get another social security number. And the going scheme is, hey, we can get this CPN number. We can get all this stuff. We can get the credit card. We can get everything that we want, credit cards, buy stuff or whatever, and then we get rid of the number. And that basically, how people been kind of using those things to obtain assets. There was a young lady in Atlanta that was doing it. She was running a mean racket. And when them folks came to see her, y'all know what folks I'm talking about. It was no more run. I put it to you this way. The way the discussion went was, you have two kids. Now it's up to you. Your child is one. You got one child is one. You got one child is three. It's up to you. Either you cooperate and you can see your children graduate high school, or you can not cooperate and see your children graduate college. It's up to you, whichever one you want to do. That I've had several clients that have asked me about those things. Run away from those, because at the end of the day, your Social Security number is your Social Security. There's no way. To me, it's just another way of scheming, basically. And you do not want to participate in nothing like that, because I promise you, them folks will catch you. Run away.
Yes, and one other thing I really want to add to that is that you may be able to get online and you may see that there is a way to get a new Social Security number and all of that. Is that technically true? Yes. This isn't the method. This isn't the method to do it, because this is something that is totally different, and it is such a narrow requirement or authorization for you to ever get a second Social Security number. The average person will never fit that. So that's something that, again, you guys have heard it from the man who protects our assets. And I say that because I know, because Saafir is my personal CPA. I guess I can tell that, Saafir, since you do, do my taxes every year and certainly keep us out of trouble. So before we go to Laurie, Saafir, you've just shared so much. Oh my gosh. What are your 3 tips that you want to leave with our entrepreneurs?
I would tell them, first and foremost, structure your business the proper way. A lot of us, we'll do sole proprietor. And like I said, I don't recommend that to anybody. Structure your business properly. Have an understanding of how you structure your business is going to depend on how taxation affects you. For example, if you do an LLC, most of the time you're going to be subjected to that 15.3% self-employment tax. However, if you do what I call a hybrid, where you may, on the tax side, you may be structured as an S corporation, meaning that your company is not taxed at all. But on the state side, you can do an LLC and you still have the protection of a corporation, but you're not taxed like a LLC. So the S corp, you can make $1 million and it's going to flow straight through. You don't pay taxes on that. Now the IRS is trying to implement some policies. I don't think it's going to go over too well.
At least not the next 4 years.
Yeah, at least not the next 4 years. But they're trying to implement policies to where, because it's such a gray area with the salary of a person that's the primary shareholder of the S corporation. It's a real gray area. Personally, I mean, I'm not going to pay a lot of taxes. It is what it is. But personally,
me either, Saafir. Thank you.
But personally, I may set my salary maybe at $20,000 or $30,000. But I have the privilege of taking distributions from my company. And I may say I want to take a distribution of $10,000 a month. And that's a deductible item from my business, but I pay no taxes on that because it's a distribution. So understand your business structure, understand your tax structure, as well as understanding as far as with your internal controls, but that's a big issue too. Your internal controls. A lot of times we want to hire, mom and them and everybody else, but if mom and them don't have that type of accounting understanding of certain things with checks and coding things properly as far as with financial statements, you may want to seek somebody out that has that understanding to take that liability off of you. So understand your structure, understand your internal controls or your internal flow, and understand your taxation.
Awesome. Thank you so much. And again, guys, I know that all of this may sound a little bit overwhelming, but I know that most of us know that we've had some situations where we've had friends or family members just because they can add and subtract real good. We just decide that we're going to let them be our bookkeepers. One other point, Saafir, I wanted you to talk about just before we switch to Laurie. Mm-hmm. You had mentioned in the first example with your funeral home client, the IRS came back and they decided to go back 5 years. Mm-hmm. Tell us, one, how can they go back 5 years, and why 5 years and not some other number?
Well, actually, they can go back 10.
Yeah.
Yeah, they can actually go back 10. They just chose 5 on him. So they chose 5 years. Maybe the agent was in a good mood that day. I don't know, but they went back 5 years on him. And basically what they did was they assessed penalties and interest, and they looked at the number of employees that he had out there in the field, and based upon what they were doing. And a lot of times what the IRS will do, they'll say, okay, if you got a guy that's a groundskeeper, average salary for him may be $15,000 a year. The IRS would go ahead and prepare your documents based on their findings. They don't take in consideration as far as with that person's personal situation, whether they're married, they're single, the amount of deductions that they may have. They don't do. They do it straight bone, straight down the middle, and that's how they assess their penalties. They also hit you with a negligent penalty. They hit you with failure to file penalty. They hit you with under or either overstatement of revenues or overstatement of taxes penalty. And that's how you can have a person that may start off owing the IRS $500 and they end up owing about $15,000 because the IRS assesses penalties and interest at 0.1% daily. So that may not seem like a lot, but if you're going back 5 years and assessing those penalties, that is a lot. Mm-hmm. So you definitely, in his case, they could have went back 10, but they only went back 5 on him.
And I wanted to make sure that, again, I know we're spending a little bit more time on taxes, but Saafir, you and I both know that this is why people a lot of times come to us. And I'll tell you, every time someone comes to me about tax, and I've had numerous people, I send them right to Saafir. I don't even touch it. It is not my area of expertise. Because I know how far reaching the IRS can be. And just like he said, think about it. You leave home in the morning and you have $150,025 in the bank in the morning, and you go to buy groceries for your family, mm-hmm. only to not be able to do that because you only have $25 left, all because you refuse to have people sign documents. That's really what it boils down to.
Exactly.
And we can't continue. And part of why we're all doing this, guys, is because we see a deficit among entrepreneurs. Saafir and I see this type of stuff all the time. This is standard, which is why we all got together to do a free forum for you guys to come together and ask questions about this, but also to share some real world examples about how this really does impact. And I don't know if you can, but if you can, Saafir, right before we go to Laurie, tell them how much money per month this person has to pay.
Before we did the non-collectible status on him, I set him up a payment plan where he was paying roughly about $3,000 a month.
That's a big chunk. Now, realistically, he should have been paying a lot more than that. Like, you were able to help him down to $3,000 a month. So before that, what were they asking before you did your magic? Before that, he was looking at roughly about $15,000. Yes. They do not care. He tried to make the argument one year that he broke his neck, and the agent said you still was making money one year, so that's not a concern of mine. Your business was still operating. You had a broke neck, but your business was still operating. And he kind of looked at me. I said, "Well, I told you not to say nothing to these folks. Let me be talking." Mm-hmm. But we was able to negotiate that down, and that's what a lot of people don't understand. The IRS will negotiate with you. It's just an understanding of their law.
they will negotiate with you, because at